All right, guys, welcome to the webinar lesson on understanding credit, what it is, and how it works. My name is Coach Darvin. I appreciate you joining this powerful webinar today on just credit, how it works. Very important. So if you got some family members that you think that may need this, share this with them. Give them a call, have them tune in, because guys, credit is a very important tool. It can help you in life. It can help you purchase real estate, purchase your first home. A lot of people buy cars. Your interest rates are based on your credit scores. And so this is a very important lesson today. So let's go right in. So credit, it plays a crucial role in modern financial systems, influencing everything from buying a home to getting a job. It's important to understand the ins and outs of credit to make informed financial decisions. Okay. And so also remember, not just for the cars and the jobs, even in the military now, they're running a credit report before you can even join the military. Okay. When you're renting a place, not just buying a place, even now when you're renting a place, they check your credit report with a lot of these management companies. Okay, your insurance, how much you pay for insurance, your rates, a lot of times is based on your credit. So very important that we take a look at that, because how much you're paying in today's world, a lot of times it depends on your credit. So let's talk about the definition of credit. Borrowing power. Credit refers to the ability to borrow money or access goods or services with the understanding that you will pay it, right? That you're going to pay them back later. It's essentially a promise to repay a debt. So that's what credit is. Credit is a promise that you're going to obtain some goods or services and you're going to pay back later. Okay? That's what credit is. Financial trust. It also measures, it's a measure of trust that a lender has in the borrower's ability to repay debts based on their past financial behavior. So this is what credit is. Someone pulls your credit report or your credit score and they look to see how you've paid other people. How trustworthy are you with the money that you're requesting from them, right? So the different types of credit, okay, credit can come in various forms, such as credit cards, mortgages, car loans, and of course, personal loans. So those are the base things that, individuals look for, or those are the basic types of credit, okay? So the importance of credit, okay? Good credit provides the flexibility to make important purchases and handle unexpected expenses. Okay, we talked about those important purchases. We talked about the house, which is the house and the car. Those are, the American dreams, a nice house and nice car. Most of the time, we can't pay cash for it. We have to pay credit, or we have to uh, get a loan from a bank or investment company so that they can pay for that house, pay for that car, and then we pay them back in increments later, right? So the access is important too, right? Access to opportunities. It can impact your ability to rent an apartment, buy a car, or even get a job. So having those opportunities when they present itself is a good thing. Having a great credit score at any given moment is a good thing. So imagine, you get this opportunity to have this great job, making six figures, and they say, "Hey, well, all right, uh, can you fill out this application? We'll be checking your credit." So imagine having a 500 credit score. Will you get the job? versus having a 750 or 800 credit score and getting the job. Okay, so it's key. No, not only that, it can be an opportunity for it could be a business opportunity. You know, someone could be selling a business, and you don't have the cash to buy the business, but you have the credibility, right? If you have good credit, the opportunity is there for you to capitalize on. So that's another reason why we should always be paying attention to our credit profile. Wherever you are today, you can get in a better place tomorrow. Even if you have a great credit score, there's still things that you should be paying attention to. You should still be increasing some of those lines or limits or reducing some of those interest rates. So it's always things that we need to be doing in this financial realm, in this credit realm, okay? Lower costs. Better scores often lead to lower interest rates on loans, ultimately saving money over time, okay? So uh, me and you can be standing on the same block. We have the same $60,000 car, and we have the same, $300,000 home. Okay, I could be paying way less money every month than you just because my credit scores are better. We have the exact same thing, and maybe with my $60,000 car, my $300,000 house, maybe I'm only paying $2,000 a month. I mean, you have the same house, the same car. My credit is better. I'm paying $2,000 a month, but since you don't understand how credit works, you never really pay attention to it. Don't pay attention to rates. Your scores aren't the best, and now you're paying $3,000 a month. That's a $12,000 difference a year, $1,000 difference every month. That $1,000 could be invested somewhere to grow and make more money. That $1,000 could just be part of your savings. $12,000 a year in 5 years. That's $60,000. So is credit important? Of course it is. So we should always be paying attention to that. Okay. So let's talk about how credit works. The lender-borrower relationship. See, credit involves a trust-based relationship between the lender and the borrower. Okay, the lender needs to um, have trust in the borrower. The lender, uh, they have things set up, right, to make sure that they can get their money back. Okay, what are those things that set up? They look at the credit report. They look at your history. They look at your income. Okay, so all of those factors are there to see if that lender, okay, can trust you and give you that loan. So this is why we should always be building on our credit profile. We should always have so many accounts reporting to our credit profile and make sure that we're never late, right? Because late is one thing that lenders don't like to see: a late payment, a collection, charge off. They don't like to see that. Now, remember, if you have late payments, charge offs, and those negatives on the report, always remember that those can be disputed until they come off the credit report. Okay. We definitely have products and programs, if that's something that you have, that we can help you get that stuff off. So I'll be giving you some information at the end of this webinar that can help you in that light if that's needed. Okay. So interest and repayment terms. Lenders they charge interest on the amount borrowed, and the borrower agrees to repay the amount borrowed along with interest over time. So remember, in most cases, when it comes to credit, you're going to be paying more than what you borrow. So if you, for example, borrow $100, you're going to have to pay more than $100 back. How much? That's going to depend on the interest rate. Today's market, the interest rates are from 0% to, I've seen some rates up to 27, 28%. So this is why it's important for you to do your homework. This is why it's important for you to always strive to have the lowest rates. Okay. Banks and credit card companies are giving away 0% interest introductory. Okay. So finding some 0% products are always good to help you offset some of your debts. Okay. But always remember that in most cases, you're paying interest. So it's best to have the lowest rate, and always good to take a look at your rates with your car loans, your home loans, and different things to see if there are other banks, other products or programs that you can use to to adjust those interest rates. Okay, because the better the rates, the better it is for you. The more money on your side of the field that you can use for other investments and things like that. Okay, so let's talk about credit reports and scores. Credit bureaus track borrowing and repayment history to generate credit reports and scores, which play a critical role in the lending process. Okay, so a lot of applications that you fill out, some of those banks have requirements where they say, hey, in order to get this loan, they have to have a 720 or better credit score. Some might be a 680 or better credit score. You have to do your due diligence and your homework to find out what those bank requirements are, okay, in order to get in there, right? This is why they look at the credit report. How many years history have you had? There are some banks that won't give you a loan or won't give you their product unless you have 2 years average history, okay? Some want you to have 6 months history. Some want you to have 4 or 5 years or better history for some of those bigger loans, right? Those bigger limits. So types of credit. We kind of talked on this before. We can get a little deeper. Credit cards. Credit cards, okay? Revolve a balance and make minimum payments. So with credit cards, for example, let's say, for instance, you have a credit card and use $100. Revolving means that you don't have to pay, right, that whole amount off the first month. If it's revolving, maybe that payment would be $10 a month, $5 a month on $100. So this is why you have to make sure it's paid on time. You also want to, and write this down, guys, put it on auto pay. Auto pay is a very important thing, okay? Auto pay means that when that payment is due, it'll come right out your bank account without you having to physically push the button to pay it. Okay, I definitely recommend that. I had so many clients, guys, just in this past year that didn't set up on auto pay and missed the payment, and it took their scores down over 100 points, and they're not able to do some of these investments they like to do. They can't do them right now because they have to get those late payments off the report before they can move forward within their goal that they had set. Okay, so let's make sure auto payment is there. So do me a favor, guys, and put auto pay, right? Put auto pay in the chat here, okay? Just say auto pay. It's very important, okay? And put it on your notes on your phone. Anything that you can set up on auto pay, please do it today, okay? So other types of credit is mortgages, right? That's like a home loan, okay? So mortgages, borrow to buy a home, secured by the property. So a bank will give you the money for the home, and then you pay interest every month, okay? That's a mortgage. And you pay for 10, 20, 30 years, whatever, uh, whichever one you sign up for, okay? And that's a mortgage. You're paying interest when you buy a house. Maybe that house is $300,000. That's what they give you the loan for. But then you're making the payment every month, and only a small portion, okay? And you look at your paperwork, only a small portion of that payment that you're paying on that mortgage goes towards the balance that's owed. For example, if you have a $300,000 mortgage, let's say, for example, your payment is $2,000 every month. maybe only $100 or $200 of that $2,000 is going towards the mortgage. I'm just giving you an example, but that's a pretty good example. Okay, I can say that in most cases, less than approximately 10 to 15% of the money that you're paying every month is going towards that principal balance. And that's why some people pay more on their mortgage, right? They pay towards the principal. They put a principal payment. And that's what really knocks down that mortgage. Your monthly payment really doesn't knock down that mortgage. Okay. So more types of credit is auto loans, right? When you get an auto loan, it's the same thing. The bank buys that auto loan for that auto for you, and you pay monthly and you pay interest. Okay. Credit scores and reports. So, what is a credit score? A credit score is a numerical representation of an individual's credit worthiness. Okay, typically ranging from 300 to 850. Okay, so um, guys, we want to be in the 700s at all times. The 700s is a safe zone. Okay, so if you're already in the 700 or plus club, put a one up. Put a one up, and congratulations to you, okay, for being in that 700 plus club. If you're not in that 700 plus club, you can get there, okay? It's not a problem. You can get there. And those that are in the 700 club, they're just one mistake away from not being in the 700 club, right? One missed payment on a credit card, okay? One collection, right? Can keep them from that 700 club. So if you were in the 700 club before and no longer in the 700 club, put a two in the chat for me. Put a two in the chat for me. And it's okay. I was there before. I had a collection hit my credit report before, and it took me from the high sevens to the mid sixes. And I had to dispute that collection off the report, and my scores went right back there. So if you're not in the 700s, you were there before. It's just a matter of reverse engineering what happened. For example, if it was a late payment that caused it to go down, if it was a collection that caused it to go down, a charge off that caused it to go down, even a bankruptcy that caused it to go down. All you need to do at this point, guys, is just dispute those items every 30 days until it comes off the report. That's it. Okay. So you can get there without a problem. If you were never there before, what you must be looking to do is getting the negatives off the report, disputing the negatives off the report if you have negatives, and you just want to make sure you have some positive accounts on the report. That's what generates a score. Accounts, positive accounts is what generates a score. Okay, guys. Now listen. The next it says credit report, right? A detailed record of a person's credit history. That's all a credit report is. It's just showing what you've done, how long you've done it, have you been late, have you been on time, what's your credit card limits, what's your credit card balance, have you been have you had a student loan before? Did you pay it off? Do you have a loan? How much is the loan? How much can you afford to pay us or this bank if they give you this loan? The credit report shows all of that, right? It don't show your income, but in a lot of cases, you could look at a person's credit report and get a base of what a potential income, what their potential income is by the type of car they have, by the type of home they have, the amount. It won't tell you the type, but it'll tell you the amount. If you see a person that has $1 million home loan on his credit profile, you know he has to be making more than $50,000 a year, right? If he has a $120,000 vehicle loan on his credit report, you know that his income is not $20,000 a year. And so that's what I mean. And so I hope this lesson, guys, today on credit reports uh, gave you some insight. Now, if you need a one-on-one session, if you want a little bit of help in making your credit report or taking your credit to the next level, Then what I'm going to do for you today, since you stuck around for the whole webinar, is I'm going to give you the opportunity to have a free one-on-one consulting call with me, Coach Darvin. Okay? And so normally my one-on-one consulting calls are $350 for 20 minutes. You'll have one for absolutely free. So all I want you to do by doing that is I want you to text the words credit. Okay? I want you to text the word credit to 414-348-5144. Okay? Text the word credit and put your full name. Okay? Text the word credit and put your full name in that text message. And I'll give you a free one-on-one session with me to see where you are and where you want to go. And I'll give you some steps and insight on what you need to do. And hopefully we'll be able to work together. And hopefully you'll be able to see that credit is the new money. And that if we don't keep it in line, we may miss out on the biggest opportunity that we ever had. So once again, text the word credit and text your name to 414-348-5144 so you can get that free one-on-one consulting call with me, Coach Darvin. Listen, guys, it's been a great webinar today. I appreciate you all for coming. And this is the coach, and we'll talk to you later. Bye now.